U.S. stocks ended sharply lower on Thursday, with each of the major averages suffering their biggest daily percentage drop in weeks, as fears intensified that the Federal Reserve's battle against inflation using aggressive interest rate hikes could lead to a recession. The Dow fell 2.25%, the S&P 500 dropped 2.5%, while the Nasdaq lost more than 3%. Separate reports showing a steeper than expected decline in retail sales on the one hand, but a strong job market on the other hand, with the biggest drop in months for claims of unemployment benefits, further unnerved investors already worried about a Fed that's determined to bring down inflation, no matter how it impacts the economy in the short term. Ken Moraif is founder and CEO of Retirement Planners of America.
The Fed doesn't care about the stock market. They've said it multiple times. But investors seem to feel that because the Federal Reserve for the last 20 years has come to our rescue every time, that they're going to do it this time. They've done everything they can to tell us we're not coming to the rescue this time. And if you think of inflation as cancer, you think of recession as the flu, given a choice of which one you want, it's the flu. And so if they're going to drive us into a recession, they're going to do it.
As for individual stocks, Netflix slumped more than 8.5%, after a media report said the company's ad-supported model was off to a slow start and that Netflix would let its advertisers take their money back after missing viewership targets. Shares of Nvidia dropped 4% after HSBC Global Research began coverage of the chipmaker stock with a reduced rating. Shares of other megacaps, Apple, Meta Platforms, and Alphabet all fell more than 4% as tech stocks bore the brunt of the selling, but shares of Tesla eked out a 0.5% gain, snapping a 3-day losing streak as a filing showed CEO Elon Musk unloaded $3.6 billion worth of shares this week.